Are you having trouble getting into the property market by yourself? Ever thought of pooling your money with a friend to buy a property? If you've ever seen a movie, I Now Pronounce You Chuck and Larry, where two friends come together and decide to get married just for a life insurance claim, then you probably at least thought about hooking up with a mate just to buy a property or to get a loan to get a property. And this is probably a conversation that many people have had before. We've got some good news for you. There's actually a little secret offering that CBA has where it allows you to buy a property with a friend without actually hooking up with them. You can even get a loan with a parent or parents, a sibling, a brother or sister, and this is all above board 100% legal. So property share is a type of loan offered by CBA where the cost of the property is shared between two different parties or entities. It essentially splits the loan, or the maximum value of the loan, into two separate loans, completely separate entities. Each of these loans have their own account, their own offset, withdrawal, and line of credit. So what this means is that you can utilize this CBA offering to finally buy that property, be it your first home or investment property, with your mate without hooking up with them. The best part of this property share loan is that each loan can have multiple borrowers. So for example, you could have a spouse that you couldn't afford a house by yourself with, and you can own a portion of the split loan. The other side of the split could be a mate, could be a sibling, could be your parents. So your parents could also be mum and dad onto that loan. And this is how it's actually split out. And once again, each loan will have its own facilities and functions and features. But there are catches, pretty big ones as well. Number one, each borrower must be owners of the property. So it can't just be you owning it and then your parents ponying up the fees. Each borrower must guarantee the other's loan. So that means in the event that one of the borrowers could not pay for the loan, the other borrower will have to take up the whole loan themselves, and which is quite a big risk. Number three, the loans cannot be used for business purposes, land purchases, construction or building loans, or bridging loan purposes. Number four, CBA does require each of the borrower to seek independent legal advice so that they understand what they're getting themselves into, as there are quite a few stipulations and things to think about. Beyond these four major things to consider, or caveats if you say, there are some other considerations that you should take into account. For example, what happens if one of the borrowers are unemployed or sick and they cannot pay? That means you have to think that, okay, there is a chance that you may need to take up the whole loan before they default. How long would this property be kept for? Would it be kept for a long term, or does one of the parties want to sell early? What happens when the property is sold? The tax portion, the capital gains tax, or any losses that is incurred, how is that split amongst the different borrowers? There's a host of other considerations, but it's best to seek independent legal advice prior to jumping into this, and obviously speak to a mortgage broker like myself. So maybe that crazy idea that you have to purchase a property with your mate, your sibling, your parents, isn't that crazy after all? And hopefully that information has helped you get into the property market. If you found that information helpful, please hit that follow button so that you can get more tips into how you can get into the property market